Very good morning, good afternoon, and good evening for all those who are watching this video. This is Sino Shivkumar from Educate to Trade, and I have a surprise news that whenever I approach Neil for asking me for his time and schedule to be completely shifted to the Zoom to YouTube session. Today we have our professional traders and the professional team along with us joining. So it's over to you, Neil. Are you able to, log in? Yes. So we have our team. Let's say Neil, who's a trader, let's say more than 50 years. I don't want to give him a speech that somebody else is joining. So we have our institutional players. This session is going to be something like what a retail trader do on the markets as well as the institutional traders and their view on the market. So let's get started.
Can you hear me now? Yeah, okay, yeah. Yeah. Right, apologies there. I have it a few times. Uh, the person to my right here sat on my volume screen. All the books here. So what we try and do before Wall Street opens, and obviously Wall Street opens at 2:30, is see how the markets have reacted. And if we look at a lot of the charts here, we see in theory that we've got the exchange chart here. You can see that you're looking at showing the mini S&Ps and also the mini Dow. That is via the exchange, and that exchange is the Chicago Mercantile Exchange, which isn't one of the biggest exchanges in the world. And therefore, what you can see on the greens are the buyers, and the sellers are on the red. Now, when you're a retail trader, you will trade on an MT4, MT5 platform, and you're just trading against that broker. Yeah, this is the reason why you can see so much more liquidity here is that trading via an exchange, you're trading against possibly 10, 15, 20,000 other people. Maybe not today because obviously the market's fairly quiet and the markets are waiting, obviously, this big news after hours. So we're aware of that. In theory, most of the other markets today have been fairly muted, apart from the the German markets and the European markets have exploded and are up a fair amount. Germany's up 100 ticks, or almost just under 1%. So we're very much aware of that. FTSE is very quiet, down on news, obviously, from the UK Prime Minister, Mr. Starmer, has said that things are going to get worse before they get better, which isn't the best news to read when you come in early on the morning. So what are we looking at today? Figures wise, news wise, nothing out today. So therefore, we're thinking, okay, we may not trade this morning. We may wait till this afternoon. This afternoon, we still got nothing out. We got two main speakers speaking today, Mr. Bostic, who's on the member of the Fed, voting Fed, and Mr. Waller, who is also talking later today. Mr. Bostic, in theory, is speaking after hours at 11 p.m. So he'll be talking about videos figures. So all eyes are on Nvidia because actually that's a company. They are bigger than Europe and bigger than the UK. So obviously they're a lot more important than obviously to what we normally trade. So in theory, lots of us won't be trade today, but that makes tomorrow the Asian session, Obviously, both India and Japan and everything else will very much have their ears to the Nvidia's company's earnings that come out. Obviously, we said later tonight. So we could have a very quiet Wednesday. We do expect a very quiet Wednesday. Also, bear in mind, tomorrow we have the initial jobless numbers in the US. That's very important. Those of you who listened to Jackson Hole last week, Mr. Powell, if you don't know who Mr. Powell is, Google him. Very important man, as I said. He said that he would do whatever it takes to keep employment up. We've seen the last few months the employment rate in the US go from 4% to 4.3%, which isn't a good sign, especially during election season. US elections are November the 5th, 2 and a bit months away, say 90 days away. And obviously, that's very important. And obviously, last week we had the issue with the BLS where they said 800 extra jobs uh, had been taken into and in theory weren't real. So obviously that made the market feel as though they're going to have to cut rates more. And obviously Mr. Powell, the Fed, said that it looks as though they could cut rates 4 times before Christmas. There's only 3 meetings between now and Christmas, and the Fed's next meeting is 2 weeks today, Wednesday. Yeah. So therefore, that's what we look into it, and that's what we look at to what we're going to trade. So therefore, we do this meeting in the morning, UK time 7:50, before uh, the European markets open, because that's when the cash markets open and that's where most of the shares. Remember, if you trade the stock market, you can't sell something you haven't got. You can do that on a CFD, cash for difference, on a futures site. Futures allows you to sell something you haven't got, and they were invented in the late 70s and obviously have been a big introduction to the market. Why would you want to sell something you haven't got? Well, if you're Mr. Nvidia and you know your earnings aren't too good, yeah, you probably more want to sell a few shares before the statement's made at 9 o'clock tonight. Also, if you think your shares are really good, you might want to use the futures to buy some shares. So again, there's 2 different ways to skin a cat, so to speak, and those will be used today. Especially if the market's long. Remember, the markets are very near their all-time highs. So you have bought, if you have bought Nvidia shares or Nasdaq shares, remember, Nvidia shares come under the Nasdaq banner, and you think where those figures were pre-August the 5th, with that big dump when the Bank of Japan said they were going to raise rates. The Nvidia shares have jumped remarkably up, probably 10%. 10% a big order, because if Nvidia turned around and said they've had fantastic earnings, but next earnings, December earnings when they come out, maybe not be as justified, the market will take a turn and take a turn down very fast in a very thin market. So that's what we look for on a Wednesday. We're not expecting much today. But obviously, we've got 10 minutes to go before we come in there. I'm going to hand this over to Nigella. Is it Nigella? Nilangela. I call her Nigella. She's a very good chef.
Hello.
Yes,
Hi.
Nila. Go on. What's your view?
Uh, yeah, about.
So, what's your view on the market? How do you take the positions now? And as Neil said, he has been explaining the orders and all. And what do you suggest as a retail investor to start off with? If I'm starting a funded account challenge now,
Hmm. Hmm.
what is the one suggestion you would give me, or what is the one thing I have to focus to get rid of the funded challenge or pass the funded challenge?
Right. And there's a couple of questions altogether. First, I'm just going to ask if you can hear me.
Yeah, yes, you can. Go on.
Brilliant. Perfect. Perfect. So that's like a couple of questions altogether.
Yeah.
Um, I mean, having a position before the market opens, I mean, it's not probably a good decision. Might not be, because the market, depending on the market sentiment and everything, open rotation is always different. And with whatever we have seen in summer market in last 2 months, just market takes 100 ticks and 200 ticks, goes up 100 ticks and falls 200 ticks the next minute. So not always comply by all the news and everything. So people who are trading the opening rotation, you can have scalping, sniping, whatever you are doing, or even like putting stop losses. You can be stopped out. It will not give a perfect direction. You can look at the price ladder as I'm sharing the screen. Depending on whatever you're reading from the order book, you can take your positions in the opening rotation, which lasts from like 1.5 to 2 minutes, maximum 2 minutes. So that's a good way to go in terms of when there's a huge liquidity in the market, especially when the market is opening. Same with the UK market and US market, and same will be with the India market as well.
Got it.
So that's one way to go. And for me, it has always worked this way, that I combine both of the approach. Like, I look at market profile and price ladder, order book.
Okay.
uh, in last 2 3 months, summer market, when all rules, whatever we have learned, didn't apply much, it
Okay.
acted completely opposite way. It was very
Is that
contradictory
because
to
of the
whatever we
summer?
have learned. Yes, summer market, volume and volatility, like there was much volatility but not much volume. So
Okay.
we, most of us, we didn't know how to work with that, especially the new traders.
Okay.
What worked with me was like 7 a.m. DAX,
Okay.
opening rotation, looking at the market profile and order book.
Okay.
uh, Mostly worked, like 70 to 80% it worked, and I was sticking by the strategy. And I know that I'll have to find a new one once the market is over. There'll be like huge volume and volatility in the market
Okay.
from September onwards, I guess. So that's a one way to go. And to answer your second question, the funded account challenge, I mean, it's quite a tricky one, and especially when it comes to in contrast with the institutional traders, because they are the big boys, they're like big shark in the um, um, ocean. How do we still like get our money from the market?
Okay.
So my advice, suggestions will be being very consistent with your funded account. You
Okay.
have a drawdown in your funded account. For example, if you are doing a 10,000 pound challenge, 10K challenge, if your
Okay.
drawdown is 5% or 6%, then you have to imagine that that is basically your account size, the drawdown size. 500
Okay.
is your account size.
Okay.
If you go below 500, then you are basically blowing the account. So you
Okay.
will have to trade and build up your account, imagining you have got the capital of 500 pound.
Okay. Okay. Okay.
So and you'll have to be very consistent once you are playing against or with the big boys. Being very consistent, as Neil always teaches us. If you have profit of £1 or £2, try to have the same amount of profit, a bit more next day. Do not go all in, or like go over the budget of your every trade. This is how you still can size your position, manage your risks with your funded account, and still be consistent with your trades and be a consistent profitable trader, even though you are a retail trader and you're playing with the institutional trader. So that would be my suggestion.
Okay. Okay. See, when we were discussing in the morning with the Neil, Neil said that market is going upward and downward. Taking all
Hmm.
the liquidity on the sideways market,
Yeah.
and whenever the sideways market happens, do you
Mm.
guys usually have a position, or how do you manage that, the sideways markets?
Yeah, that's a very good question again. Price action.
Yeah.
Generally, when again it's not summer market, what we have seen before 2 months, people have different strategies, different approaches.
Okay.
So technical people, they figure out all the levels. The few
Okay.
people who do price action, few people go with order block, market strategy. There are like different approaches to take.
Okay.
Especially, basically, me and Neil, we are fundamental traders. We trade news and we have our positions. We react to the news, react to the data,
Okay.
with the stop losses on and everything. So price action helps a lot in terms of figuring out the level, figuring out your target and stop losses. That's one approach to go.
Okay.
And secondly, when we do not know, the way you said that sideways, you don't know where the market will head without any news,
Okay.
then it's generally advisable to probably stay away of the market. Or if you have a strategy, for example, moving average, we have a trader here, a very esteemed one on our floor, Enzo. He does trade with moving average. He
Okay.
doesn't follow any news. He just has his position based on his technical, which is moving average, 20 point and 100 point.
Okay.
So and his ratio is 3 to 1, and he has got like 70 to 80% winning rate.
Okay.
So even though he doesn't follow any news and doesn't know where the market will head, still he is a consistent profitable trader.
Okay. Okay.
So when we do not know which way the market will head, the direction, till you have a budget for every trade,
Okay.
and you're sticking by your strategy, I think that'll be fine.
All right, all right. That's great. Thank you so much for your answers. That was wonderful. And Neil, I have a question to you. See,
Neil,
there, yeah, is he there?
yeah, I think he's in a meeting.
No
Within
problem.
1 minute, he'll be
No
back.
problem. That's completely fine.
I
See,
think today's hype is all about the Nvidia.
no, no, I know that, but most people are focusing on the Nvidia. But
Yeah.
Neil has posted on his LinkedIn last week or so.
Hmm.
There are so many funded accounts has been closed or short,
Yes.
they
Yes.
shut
I
their
think,
store.
Neil, this question is for you.
Yeah.
Hello.
Yes, Neil. So, two questions to you. One is, there are uh, regarding to your LinkedIn post which you have posted. There are so many funded accounts has been closed, but why educate to trade? If I'm a newbie who want to, come into the forex market, why educate to trade? And what is the main reason where the funded accounts or the prop firms get closed, or don't pay out? What do you think? What is in your opinion on that?
Well, I
And
think one of the reasons why I came to educated trade many moons ago was the fact that part of the things that when you trade from home, and a lot of people, your followers and everything else, is that they do trade from home. So the only thing they can talk to is either your channel, yeah, or a discussion group. And obviously, our Telegram discussion group, you can banter, you can talk to each other. What contract do you trade? Do you trade FX? A lot of people come in and say, "Oh, I just trade FX." You say, "Why do you just trade FX? Why don't you trade commodities? Why don't you trade bonds? Why don't you trade anything else? Adapt to what you can trade for." And obviously,
okay,
we've had to adapt a bit. Not that I trade them as much, but cryptos. Why is everyone said, why is crypto so good? The other question you said about funded accounts. Why do people come to funded accounts? Uh, the main reason really they haven't got enough money to set up their own account. In
okay,
theory, you need X amount to trade your own account, and you probably need near £10,000 sterling, UK money, or maybe £20,000. And people
okay,
haven't got that spare money cash, so therefore they go to the prop house route or the funded accounts route, and therefore can pay a percentage in, and then you get a funded account. I wouldn't believe so much that you've got 100k or £1 million or £10 million account, but you have sufficient enough money that allows you to trade and start how to trade. One of the issues you will have is that how long you perceive it's going to take you to become a proficient professional trader as opposed to a hobby horse trader. And I think that to a lot of people, they think it's in the months, and not sadly, but more professionally, like anything else you do, it's going to take you a year or if not more.
okay, okay.
Yeah. Uh,
And the last is always about Nvidia. And what is your point of view on the Nvidia?
well, we've come to to the things that individual companies. What have you done here? So individual companies didn't have that much traction before, but now we've got the opening. That we said that the Magnificent Seven, was it Apple, Amazon, Nvidia, Tesla, Alphabet? I think what the others are, Meta, Facebook, you want to call it. They now are bigger than individual countries. Nvidia's earnings now are bigger than Europe and the UK. So in theory, when their earnings come out, and they come out, remember, 4 times a year, they will move the market. So we'll be foolish to ignore it. For your clients out in India, which could be the perfect time to trade. For us, we're going to bed. Your clients are waking up to what Nvidia can do. If you look quickly, we've now got Wall Street opening at 2:30, and in
Okay,
theory, this is what we look at in the morning. We've got the ladder here, and we can see what people do in market and opens and what they do in the first 2 minutes of trading. So 2:30 to 2:32 our time, we can see what's coming in here, and we see obviously not a lot because of the video coming in. On the left, right here, we have a mini Dow Jones, and we see that's less volume in here. And obviously, we've got the mini S&Ps. Now the S&Ps look as though they're moving a lot, but remember they're in quarter ticks. Yeah, yeah. And when you got most of your platforms, that price in S&Ps will probably be in half a point or three-quarters of a point. So we see a lot more movement in the market here. And we're seeing on the open here, we're seeing Wall Street rally 15, 26, nothing massive here. S&Ps again moved up and moved down. Because remember, when you trade on the opening, especially if you're a client of a broker, remember I've been both really. If you want to trade on the opening, you trade on an MOO, move, yeah, yeah, not a cow noise, but a market on open noise. So what that market on open means, you want to buy X amount. Well, say you want to buy 100 bananas, that's all you want. So the price is relevant. The quantity is more important. Yeah. The same on the close. If you want to trade on the close, you trade an MOC order, a market on close order. And again, you just want to sell a quantity. So that's why we always get this volatility on the openings, Wall Street, 2:30 UK time, and the same at 8 o'clock in the morning. Yeah, we get the same thing, market and open here. So we bear in mind it. So normally on a normal day, we can see Wall Street in that first 2, 3, 4 minutes move 100 points. 150 points. Today, because we've got the video, we've seen the market hardly move at all, as expected. Hence why there's hardly anyone trading. Yeah. So therefore, we look at it to see which way we're going to go. Whether you've got your market profile here on our SPX here, we're banging in theory SPX. We're just below the point of control, so we're not expecting much of the market yet. And in theory, we were stuck around there yesterday. So again, being aware of what's coming out, even it's later in the day, and how important it is. Last week, a lot of people waited till Friday. Jack's whole once a year symposium, all the top central banks there. And again, we're thinking here, Wall Street's been up 20 ticks, down 20 ticks, and S&P's have done the same. So not looking for a lot. So in theory, it's telling you almost not to trade.
Okay.
Yeah, and one of the great things about being a proficient trader or a consistent trader is to know when not to trade. And at the moment, that's screaming at you, don't trade.
Okay.
We've seen that on the opening. They came in and bought Wall Street. They came in and bought S&Ps, but that only lasts 2 minutes. The opening rotation is 2 minutes, 2:30 to 2:32. We're hit 2:32 now, and that initial rally has dissipated. Yeah, if you look at the 1 minute chart there that we got in there, we're seeing that's come all the way back in your face. So in theory, what are we looking at here for the S&Ps here? What we 28? We're looking at the come all the way down. Well, we could come down another 20 points, but we won't do because obviously we're all waiting for that figure. That's not going to be out for another was it 6.5 hours? That's a long wait. Yeah. And in that time, hopefully we'll be in the sunshine, in a pub, in London. Hopefully. All right.
Okay. Okay.
And you watch the opening race that comes in there, but we see the market rallies up. But Wall Street definitely taken a turn south. Uh, uh, if we can see here, if we put it on the minute chart, if we can base it here, back here, we can swap that chart for this chart. Is that helping us here? Oh, we're not in there. We can't see it, can we? But if you put it on your 1 minute chart for your Wall Street, you can see that's gone from 230. We were 41 to, so we dropped 100 ticks in 3 minutes on Wall Street.
Okay.
And that's what people do for the opening rotation, the MOO order. So the MOO open market was a bit of a buying up for 10 seconds, and in the next 120 seconds we've gone south. And sometimes that range for the next 2-3 hours is done in the first 3 minutes of trading. And you might see a bit of selling because I think a lot of people are long. If you are long, then the
Yes. Yes.
video, you might buy the rumor and sell the fact. I always think to myself, if we're coming to 9 o'clock, everyone says the video owners are going to be fantastic, but they're going to have to be fantastic because they're esteemed to be the number one company in the world.
Got it. So, what is your take on the gold? Is
Gold,
there
well, gold
any
we saw today.
points related
If
to,
we if we put gold up here, there's a quick look at gold in there. We saw gold sell off when India opened and when Japan opened this morning. We come off like $20. Uh, and obviously we're still down there now, aren't we? We've rallied a bit. We hit a low on that gold earlier this morning. Hang on, let's put it on a 30-minute chart. We saw gold hit a low. Well, about an hour ago, we got down to 2,493. We've almost rallied $10 up here, but again, very volatile session in gold. Gold, gold has been bought for two reasons recently. Obviously the Federal Reserve's insistence now that they're going to cut rates. They're going to cut rates, therefore you might as well buy some gold. But also the escalation and the geopolitical issues in both Gaza, Israel, Ukraine, and Russia and probably even more so due to that German incident over the weekend where the person who stabbed those poor people was a Syrian refugee, and obviously ISIS and everything else claimed that. So therefore, I always say if you have an escalation and you go back to when Russia invaded the Ukraine, uh, gold went up what $80. Yeah,
okay.
and again when Hamas attacked Israel on was it the 7th of October last year, and we saw gold was also a great thing to go to. So it's a safe haven, uh, but I mean, at the moment gold is very near its all-time highs.
Okay. Okay. Thank you so much for that. Anything else you want to add to the session?
No, we try and do our zooms at 7:50 in the morning UK time and 2:20 in the afternoon. It's either Chris, me, Jerry, or indeed you. And then we may have to add one Indian time now because we're very much aware that the best times to trade are early in the day. I know it means we have to get up early,
Yeah,
but
I
I mean,
understand.
you
So we
don't mind.
have our session for your information. We do our session for the Asian market. Let's say Indian market, we do trade. As we started today, just off. So let's plan ahead and have a post market report or something like that for Indian
Yep,
viewers as well, because most of the viewers are from India. So
exactly. And even the UK or European ones are up trading at 4 a.m.
got it. Got it.
Because we like to make. Should never call it easier money, but easier money sometimes, or is that 4 o'clock, 5 o'clock a.m.
Okay. Okay.
session?
So we can plan that as well in the coming session. Thank you so much for your
Okay,
valuable
thank
time.
you.
Nilanjana, thank you so much. Thank you so much, everybody who have joined this session, and we will keep the session going, as well as we will get the experienced traders, knowledge sharing sessions as well, so that you can learn as much as possible from educate to trade and make your positions accordingly. So wish you nothing less than success ahead in whatever the things you are doing. See you on the next session.